What is up guys, my name is Ignas, welcome back to the channel. A month passed and we are back with November's dividend portfolio update. First we'll check in Revolut app which companies paid dividends and which stocks I bought and sold out of. Then we'll go into the portfolio tracker on Google Sheets to have a more detailed look into the dividend progress. And lastly we'll see how the portfolio is doing overall and which market sector should be the focus adding new money into going further. An early thumbs up is greatly appreciated, and with that out of the way, let's begin. Let's take the transactions history. So November started with a dividend from a communication services name AT&T, ticker symbol T, a dividend of $1.04. Then also on the same day as per usual I have added $300 new in and bought into an industrials name FedEx, ticker symbol FDX, taking 1.1 of a share at $271.22 per share. Later on we'll go into Google Sheets to check how large this position now is and how it has so far been performing. Now November 7th we have a dividend from consumer staples, Lowe's, ticker symbol LOW, plus $2.35. November 8th information technology, ASML, a dividend of $1.23. And now we are getting to the interesting part. So on November 11th there was one dividend from financials, MasterCard, ticker symbol MA, plus 71 cents. And then I made several moves in the portfolio. This means closing positions on 3 names completely. These either are not paying dividends, or a name that I don't see working going further. So one is Baidu, ticker symbol BIDU. This position was $108.60. Then Solventum, ticker symbol SOLV. It was a spin-off from 3M, got $31.16. And then I decided to close the position in Walgreens Boots Alliance, ticker symbol WBA. So that was another $42.87. Now summing these up and also taking previously earned dividends, I started a new position in a dividend paying name, which is a consumer staples Pepsi, ticker symbol PEP. So for $250, bought 1.51 of a share at $164.82 per share. We'll also check into the progress of this position later on. Now continuing with the dividends, there was another on November 18th. Information Technology Accenture, ticker symbol ACN, plus $1.29. Then November 21st Industrials Caterpillar, ticker symbol CAT, dividend of $2.39. And lastly, November 25, 2 names from financial sector paid dividends. One is Citigroup, ticker symbol C, a dividend of $2.12. And then Charles Schwab, SCHW, another dividend of $1.28. So these were all the moves and dividends that happened in November. And now let's get into Google Sheets to further check into details and dividend progress. So we are now in the dividend portfolio tracker on Google Sheets. And we have the monthly dividends tab open. I've summed up all the dividends that were received in November, and the sum comes in at $12.41. So it is $2 more of what we got 3 months ago back in August, which is $10.60. But comparing this to November of 2023, where the dividend summed at $13.74, this is unfortunately lower for 9.7%. So we do see a decrease in dividend, but this can probably be explained with the positions that I've switched previously. So it could happen that we are receiving less in dividends for the second month in the quarter, though this is compensated with what we have received in October and probably will in December. Now taking the sum for the year, currently we are at $207.22. So 11 months in, we are now over the last year result of $203.28. Currently $4 more than 2023, so 2% up. But then December will bring another large dividend addition. Looking into September result, it should be also around $33. So the sum for the year will be around $240, meaning a $40 increase in dividends, plus 20% compared to 2023. Let us see how that goes. But I already saw December's first dividend from Starbucks, and that does put me in a hopeful mood. So we have checked into how much in dividends we are receiving, But now let us also recheck what expenses can be covered with it. So currently the portfolio should be bringing $313.08 in dividends on an annual basis, which comes at $26.09 every month. Now there is one new expense that I've added into this list. So a monthly gym membership is now $21, which even now fortunately can be covered with the dividend income. In fact, covering 124% of it. But moving on, the next expense is entertainment at $40 a month. Still away from this goal, only covering 65.2% of that. So need to keep on adding money into the dividend portfolio. And then we have a sum of monthly expenses that come in at $860. So with current dividend income of $26, we can only cover 3%. So still a long way to go to cover all these expenses combined every month. So now that we have already checked into the dividend progress, let us take the portfolio tracker and see how these positions that I bought into are performing. So in November I've added $300 new into Industrials FedEx, ticker symbol FDX. Currently have 2.82 of a share at an average buying price of $213.06 per share. Now the cost basis for the position is $601.08. And the stock is up, so the position is valued at $800.29. This means that we have an increase of $199.21 on it, which is plus 33.14%. FedEx currently takes up 4.78% of the portfolio, and it is 35.02% of overall exposure in the industrial sector. The stock is currently trading at a dividend yield of 1.92%. But since I bought it at a cheaper stock price, my yield on cost is currently at 2.55%. And overall this position is bringing $15.32 in dividends on an annual basis. Now as we saw previously, I've closed out of 3 positions and did start one new in consumer staples, that is PepsiCo, ticker symbol PEP. I currently have 1.51 of a share at a buying price of $165.53 per share. So the cost basis on the position is $250, though the stock is a bit lower now and the value for the position is $241.89, meaning that I'm down $8.11 on it, and that is a decrease of 3.24%. Now PepsiCo is comparatively a small position, currently takes up 1.45% of the portfolio, and is 14.31% of exposure in the consumer staples sector. Now the stock is trading at a dividend yield of 3.29%, and unfortunately I bought it just a bit higher, so the yield on cost is 3.18%. And this position is now bringing $7.89 in dividends on an annual basis. Overall, as we already saw, the portfolio is bringing $313.08 in dividends every year, which is a dividend yield on the portfolio of 1.87%, though the portfolio is up, meaning that the yield on cost is actually 2.47%. This portfolio is currently valued at $16,729.34, and I have myself deposited $12,680, so we are up for $1,449.34, meaning an overall increase of 31.93%. So we checked through the dividend progress and also how the portfolio is performing, but now let us take a look into its exposure by market sectors to determine which one should be the focus for adding new money into going further. So in November I've added money in industrials. Currently there is $2,270.97 in companies from this sector, and that is 13.62% of the portfolio, where the target is set at 14%. And also I added money in consumer staples. Currently we have $1,690.26 in this sector. That is 10.1% of the portfolio, and the target is also set at 10%. So as you can see, most of the sector weightings are within targets, almost all showing green, except for one, information technology. Currently we have $3,119.22 in companies in it. That is 18.65% of the portfolio, and the target is set at 20%. So it seems that I need to add some new money into this sector. For next time I will take several tech names, do the usual dividend comparison, to check which stock should be picked to add new money into, next month when the new cash edition is available. Currently I have 6 names in the portfolio from information technology sector: Intel, Microsoft, ASML, FIS, Qualcomm and Accenture. So we'll probably pick one of these to add new money into, and the dividend comparison will help me decide which one should that be. And so that was it with today's dividend portfolio update. If you would be interested in details, you can access this portfolio tracker on Google Sheets. There is a link for it at the top of the description. You can also not only access it but make a copy if you would be interested in using it for yourself. All I ask in return is to support the channel and leave a thumbs up under the video. And for next time I think we'll meet for the promised dividend stock comparison. So that was it from my side, thank you for watching and I'll see you all in the next one.
Dividend.